Welcome to Chart of the Day Cafe for Thursday, July 21st, 2016. Just going to read our disclaimer quickly. Trading stocks is a high level of risk and viewers should complete their own due diligence on any stock or underlying that they intend to own. 100% of the content of this video and communique is intended for journalistic and educational purposes only. This video and all indicators, strategies, and articles herein should not be construed as investment advice. Thank you for your patience with that and for me getting this out a little later than I normally do. It's the summertime and I'm kind of on more relaxed summer hours. So with that out of the way, let's start our video, which we always begin with a look at the Russell Index, and for that we use the IWM, which is the ETF that represents the Russell 2000, and we're looking at it on a 5-year monthly time frame, and we've been paying particular attention to the blue channel that the Russell traded within through all of 2014, had this little uptick up and out in early 15, the subsequent sell-off, and here's where we are right here, right now. I find this candle for the month of June an interesting one, this doji. So we're a good part of the way through July, and so far the candle is very bullish looking, but I've got this more minor orange line drawn in here as this more minor area of resistance, which is kind of where we are right here, right now. I'm going to move it away from the 5-year monthly chart to the 2-year weekly so you can better see that. So I think this area will be interesting. I want to see how price behaves this week and next week, and whether we can continue with this price strength. We've had 3 really strong weeks in a row, but the reason I'm bringing this area to your attention, I'm just gonna pull it away. I love looking at things in a lot of different time frames, and sometimes I even go and back and look at things yearly. So I'm going to look at the index itself instead of the ETF. So this is the Russell Index. And if I put it on yearly, you can see that this area is really interesting right here, right now. So here's the candle for 2015, red candle with a wick at the top. 2014, 2013, so this area right here, if we start to reverse and complement the candle from 2015 and get more of a reversal than people might be expecting, it could get interesting. So this area right here was important for a whole, as we know from looking at the smaller charts, for at least a couple and a half years. So this area will be interesting to see if we can clear it. So I'll go back and away from my yearly chart to the 5-year monthly. And we also have been keeping an eye on the 50 and 100 day. So in earlier videos, I've been saying for the first time since 2010, let me put it on a weekly. Let's go back 10 years actually. And let me get rid of my drawings. Thanks for your patience. So if I get rid of the drawings, you can see on a 10-year weekly, the ETF IWM, which is the Russell Index, had across the 50, the blue line crossed the 100-day moving average in early 2010, and it had this nice run up, kind of railroad tracks, a little bit of a hug here, but for the most part, a nice run. And we're, for the first time since, it's crossed over. So I want to be extra careful, and I'm not putting any new charts forward for our watch list until I see that cross up and over again and head this way. But right now it looks a little slanty and even suggests perhaps a little bit of a head and shoulders. So shoulder, head, shoulder. So the candle for the month of June, I want to see how July actually ends up. So just wanted to point that out. So with that, we're keeping the videos kind of short these days and just waiting. Let me get back to my normal. There we go. Put the drawings back in. And so that's my explanation for why I think this area might be kind of important. So we will see. So with that, I will leave you and hope you have a great weekend. Take care and good trading.